Let's learn how to present a balance sheet. Balance sheet, the most important part of a financial statement. See, by looking at the balance sheet only, we get to know how the organization is performing. You can also see that on some channels the stock market price is continuously going, and by looking at the balance sheet the investors decide whether we have to invest in a particular stock or not. So preparing a balance sheet is very important to know the financial position of a business. Now, important point while drawing the balance sheet, you will not have a debit or a credit here. As per what you were recording earlier, don't put a debit or a credit on top of the accounts, and balance sheet is always on a particular date. So what do we write? Balance sheet of, say it is Mr. X, so balance sheet of Mr. X as on so and so date. Say for it is as on 31st March 2015, end of the financial year. Is it credit side? No. Is this debit side? No. The right hand side is the assets side and the left hand side is the liabilities side. So what do we write in the liabilities side? First of all, it is capital. We don't even use to and by in balance sheet. Remember that. Neither do you use debit or credit signs, neither do you use to or by abbreviations. Okay, the first thing is capital. Capital with so and so amount, or if it is a private limited company or a public limited company, the format do changes, but then the capital is known as shareholders fund. Here capital is the proprietor's fund. Proprietor is the person who is investing in this business. For now, remember, capital or proprietor's fund is the first thing that you will write in your liabilities side. Okay. Now next, once I have written the capital, say in the inside blocks, if I have written the capital and there is net profit which I will take from the profit and loss account, what will I do with the net profit? I will raise my capital with that much amount. So I will add net profit from profit and loss account, transferred from profit and loss account. Once I prepare the profit and loss account, the balancing figure will be net profit or net loss. If it is net profit, add it to the capital. If it is net loss, subtract it from the capital. And one thing which I need to subtract is my drawings. Now this gives the net effect. Drawings, the amount which I withdrew from the business, it is no more available to my business, so I will subtract it. So very simple formula, capital add net profit less drawings is my final capital, which I will take out in this column. Then what else do I have for liabilities? It is long-term debts. long-term debts taken from outsiders or taken from bank. Any long-term debts which I have to repay is my liabilities because I have to repay it. Then my current liabilities. See, here it is written liabilities. So all the liabilities which a business needs to pay will be recorded here. Current liabilities. What all can be current liabilities? First of all, my creditors, from whom I have purchased goods and I need to pay them in near future. So the creditors will be recorded here. Bills payable, as we all know now that bills payable are my liability, bills receivable are my asset. And sales tax collected. Sales tax collected. If I collect the sales tax, I need to deposit it in the government's bank account. So it is a liability, it is lying with me, but actually it belongs to the government. So it is a liability, I have to pay it to the government. So sales tax collected. That is why we never record sales tax as part of our sales. Important point. In trading account also, if you find sales tax collected, subtract it from the sales amount, because sales tax collected is actually a liability, I need to repay it. Okay, now what all things can I find in my assets side? See, what does assets actually do? Assets help in the smooth running of the business. These are those things which help to generate revenue. Okay, so I will bifurcate it first into fixed assets. What all thing can you write in fixed assets? So many things. Land and building, then plant and machinery, land and building, plant and machinery. Okay, then your office furniture, your tools, dies and molds, okay, these can be your fixed assets. We'll later on, when we learn the adjustment, we'll learn how to record depreciation in books of accounts, in balance sheet, as well as in your profit and loss account. But for now, just remember that land and building, plant and machinery, furniture, tools and dies. See, all these assets are such that their benefit will not be exhausted in 1 year. Land and building, is it so that it will stand for 1 year and the other year it is vanished? No, it will stay for years and years. Same for plant and machinery, furniture, tools, molds and dies. If it is working for more than an year, then all the expenses, all such things are called as our fixed asset. Okay, now investments. Investments for more than 1 year is long-term investments, and they are our asset because they will help us to generate revenue. And now you have current asset, in current asset, what will you write? Debtors, then your stock, opening stock or closing stock. Obviously it is at the date is 31st March when the accounts are closing. It has to be closing stock. Okay. Then bills receivable. Bills receivable is always an asset. Then you have cash in hand and cash at bank. And cash at bank. These are also your current assets. Keep changing within a year. So these are all your current assets. Other than these assets, some more assets an organization can have. Those are intangible assets. You cannot touch them, but they have value for the business. What are those assets? Goodwill, patents, copyrights, and trademarks. Okay, so this is actually a journal picture of your balance sheet. I will recap. First of all, write the capital in the liabilities side. Then add up the net profit which you receive from profit and loss account. Subtract the drawings. Take the net figure outside in the outside column over here. Long term debts which I need to repay. Then current liabilities. Within 12 months they will be exhausted or repaid. Generally are our current liabilities, creditors, bills payable, and sale tax collected. Then our fixed assets which will not change over a year. Land and building, plant and machinery, furniture, tools, dyes and molds. Then investments, they can be long term or short term. Then the current assets will be debtors, closing stock, bill receivable, cash in hand, cash at bank, and other intangible assets like goodwill will be recorded in balance sheet, and then we will do a total of both the sides. There is nothing called as debit or credit in balance sheet, and we don't use abbreviations to and by in balance sheet. We just keep recording the items. It'll give a more clarity when we actually solve some questions. So we'll proceed to do that now.